Hey, what's going on, guys? Today we're going to be talking about what Janet Yellen and Jerome Powell just said about the economy and how it can affect the market in the next couple of days/weeks. So let's get straight into it. Okay, so first, to sum it all up, both of them basically were saying that the economy was going to look good for the year of 2021, and that this year was going to be the year of the recovery after the pandemic had shut down the country for almost a whole year. They talk about unemployment rates and inflation, and they both note that there are more people joining the labor force and that the unemployment could go down. But since people are joining the labor force, that means that unemployment rates could still go down, but maybe not as fast as they would have thought, because a lot of corporations and other places are looking to open up when the pandemic is over. And so Jerome basically says that since people are getting back into the labor force, that it's good that unemployment is supposed to go down over time. Maybe not the fastest as they thought it would be, but then he also says that since there's more people getting into the labor force, the economy will look to get better and better over time for 2021. But we're going to go into how and what Janet Yellen and Jerome Powell had said today that could affect the market for the next couple of weeks. So today's little market slip was due to the fact that Janet Yellen and Jerome Powell didn't point out to some stuff which the market kind of didn't like, and they were continuously saying the same thing since they have been from last week, where Jerome Powell talked about how the Fed saw that the economy was going to do good, and they listed out unemployment, GDP level, inflation, and interest rate, and all of that. I'll link the video for where I talked about that down below. So basically, after Jerome had said all of this, then we saw that the 10-year and interest rates were actually going up. And that's kind of a way that the market is saying that they really agree that the economy is going to go up in 2021. But maybe something that Jerome said today, which could have affected the market, is that he said that we could see inflation going up to 2%. And he was kind of saying this in a happy kind of way and was not worried and didn't know that the market was going to be affected really heavily by this news. And he says that bottlenecks or like lack of supply in supply chains are going to be short term, and that bottlenecks in chips are going to also be a short term effect. And he kind of talked about this earlier last week when he was saying that in the GDP levels, if they continue to rise, then the supply and demand won't cause some inflation, because if there's still a high demand this year, then he said that America's great enough to bring their supply and supply to those demands. But he really points out that this all will take time, and it'll continuously go up and down, and then will settle around in 2022, when he said that I believe inflation was to be under 2%, previously from what he said today. And yeah, he keeps on saying that the economy is going to get good. That brings up the bond yields, and that's just a way of saying that the bond yields are, and the market is agreeing that the economy will get better this year. But he keeps on saying that it will take time to settle down and actually grow. Okay, and now I want to go into where the Nasdaq is currently. And today we saw it go down to below 13,000. Just let's look at the 3 month, when it was at its all-time high of over 14,000. And then we saw obviously the big tech sell-off. And now in the first or second week of March, it saw a couple of great green days, and now is going to look back down as it's 2% down today. And just off the top of my head, I knew that Etsy, Tesla, Neo, a lot of techs and recovery stocks too. I think Carnival, Delta, a lot of those ones were down today significantly after this news that broke today. But if we look at how we saw these few green days right here from the 3rd to the 16th, when it was looking like the Nasdaq was going to recover from its 10% fall from 14,000 all the way to around 12,700, we saw that the Nasdaq was going to recover, and then obviously today and yesterday we saw that it was going down and is looking to go even lower to what it was at during its 10% fall. And so this gives the warning that there might be a big green time and then a double dip basically. So we saw a high right there and then it dropped 10%, and now it went up and now is going back down, which is considered a double dip, as we see one dip here and then a potential second dip right here. But the thing is that we could see that the market won't continuously drop as much as it did when there was a tech sell-off. And I say this because the last dip, we saw that people were really fearful, that they were wondering, what's the Fed going to say about the economy? Is it going to be a good statement? Is it going to be bad? Were bond yields going to go up? Were interest rates going to go up? Was inflation going to be really bad because we printed 3 stimulus and a lot of money in the last year? And that kind of brought it an over-exaggeration to lead to a 10% fall. But this time, however, we could only see an 8% fall compared to 10, just because there's not that much fear in how the economy will do for 2021. But if the market doesn't go down 10%, then we could rely on how the CPI data is supposed to do for next month. And if it shows signs of inflation and that inflation is going to be rising and rising this year, then we could see a very big sell-off and the market could crash to lower than what it was a couple weeks ago. But if the CPI data is not that bad and inflation isn't going to be a very big spike this year or in the next months, then we could see that people could transition back to buying their growth stocks and tech stocks. But yeah, another way to look at the market right now is that we could hold our cash holdings, and once you feel that those growth stocks or tech stocks or whatever you're trying to buy is really low, then you take out of your cash and put it into those growth stocks because they may be undervalued, if that's on your opinion, and then we could see a recovery if it hits the low bottoms. Well, yeah, that's going to wrap it up for this one. The market's in a really crazy kind of state right now, just starting off 2021. And let me know what you guys want next, and I'll catch you then.